Waiting to
Can you
hear you.
hear me?
Got you now, Kathy. Welcome.
Hi. Thanks for
Hi.
having me.
Oh, it's a pleasure to meet you. Thank you so much for taking time out of your day before the open. And were you going to show us anything where you would need to share your screen?
I absolutely can. I'm prepared to do so if you'd like me
Okay,
to.
sure. So have you used Zoom before? There's a green box that says share screen on the
Okay.
drop-down menu. There you go.
Okay, great.
All
Well,
right. All right,
hi
Kathy.
again.
So, like I was saying in the intro, we do, for us, the life cycle of a trade can be 10 minutes. Long term is a month in highly leveraged currency trading. And, I learned later in life that wealth building is built not just with short-term trading, but you have to have some long-term ideas. And it's great when you're making money in your short-term trading account, but it's great to pull money out of that account and go into something that you could hold for a while that offers growth potential, like the growth stocks. So um, this isn't exactly my wheelhouse, so I'm looking forward to learning from you. So why don't you just take it away, and I'll interject when I have a question or our
Okay, great.
attendees.
Well, can you see my screen?
Yeah, we have GSX. We have all of those symbols up. Best performing
Okay,
IPOs of 2019 to 2020.
great. Well, yeah, I wanted to share just what some of the top performing IPOs are from 2019 to 2020. And what's really interesting about this is that really these top 10 stocks that I have listed here are actually all IPO'd in 2019. And you can see the gains here range from 800% plus to 242%, and this is from the day one closing price. And you were talking about the short term and the long term aspect. So this is really talking about the long term aspect. Especially if you're a person who doesn't want a short term trade, even though you're excited about a new initial public offering coming out, really the gains to be made on IPOs, in my opinion, and based on the research, the more lucrative returns come later. And so these stocks I'm showing here IPO'd in 2019, but they really didn't start their run until later, maybe 6 months to a year later. And so really, even though we ran the data from 2019 to 2020, these are the top stocks from 2019 IPOs. You would think
Okay.
that's all I'm showing, but I'm not. Does that make
Okay.
sense?
Yeah, and I have a question, and I've always felt that it really wasn't fair to the general investing public that they don't get the allocation before the first day of trading. And the people that get in and get allocated shares on most opening days are offered tremendous gains to sell into the public on day one.
Yes.
So,
Yes, exactly.
what's your view on how IPOs are allocated by whoever the broker is that's sponsoring the IPO?
Well, I agree with you, everything that you just said. And that is actually exactly why when we were running our numbers and calculating the data to find out, how these IPOs really perform, we did it from the day one closing price, because the retail investor, that's usually when they can get into it. They don't have the special agreements where they can get in on an early, and then we're the
Right.
ones trying to get in and they're the ones selling, which and that's where we came up with the institutional due diligence phase, and I'll show that in a second. And that's when they're really trying to find out if they want to hold on to it or buy it back after getting that initial purchase beforehand and then selling to the retail public.
Okay, and I'm also interested that I've seen many of them come public with 100% gains, and maybe even going back to things like Twitter and Facebook, and God, I'm so old, I remember Google, and where the IPOs would come out, and then you'd have to live through a period of price depreciation that occurs, and there have been some pretty deep corrections from maybe day 10 or day 3 after the IPO on some of these issues. And how, to me, a lot of what we do is the art of when, the timing.
Right.
All right. So, I mean, you've probably noticed that same thing too, right? Where, they come public and then, I've seen them drop 30, 40%. How do you navigate that?
Yeah, well, I jumped ahead here to one of
Okay.
the patterns that we identified that I wanted to show you, and specifically the pump and dump pattern, we call it. And this actually is a line chart of Facebook. And I'm
Oh,
sure you
okay.
definitely remember Facebook. And this is the
Yeah.
perfect example of, tons of fanfare. Everybody's gonna want to get into Facebook. And then what happened? Went down the first day, went down the second day, the third day, so on. And it just created, you see the dotted line there.
Right.
Here was that first day price there. And
Right.
yeah, all it did was go down. I mean, it didn't know how to make money. Nobody knew if it was going to be able to make money. And so this is that institutional due diligence phase I was talking about. So all those people you were speaking of earlier that were able to get in before the retail investor, they were all just selling their shares, right? And then
Right.
people like us who maybe don't know better are buying it. And then unfortunately they're seeing these losses, really. I mean, and Lyft actually did something similar, I remember, because we were comparing even Lyft to Facebook, a similar pump and dump pattern. And so this period right here is where, can be 6 months, a year, 2, 3 years, maybe even up to 8 years. And then at that point, you're really not even thinking of it as an IPO anymore. But this is where you want to watch it. You don't want to take them off your radar. Facebook, really, this big catapult right here was when they first said, okay, yeah, now we know how to make money. And then everybody was getting into it there. And this is what you want to watch for those big gap ups to happen. They're coming back to where they originally IPO'd, and they're hopefully creating a base of some sort that we can buy from. And in Facebook's case, they had this big gap up, and really there was a short opportunity to get in there. And then, now it's a slower mover, but it's been a good stock if you were able to get into it and keeping your eye out when it transitioned from the institutional due diligence phase to the institutional advance phase.
Okay.
Does that make sense?
Yeah. So, when would you, if you didn't buy it, you just wait for, it's kind of like a breakout with the market taking out the IPO price level. Is that what you wait for to enter it? Or do you take advantage of after the pump and dump to buy it cheaper than the initial IPO if that opportunity presents itself?
I think a really great way to watch some of these is to kind of do what I've done here is draw a long-term trend line, especially on a stock that, if you've been watching the story and like Facebook, was trying to figure out how to become profitable. And when that trend line changes, if you didn't want to wait for a base, this could be a first opportunity to get in there. And I use MarketSmith's charts, which I know is different from what you guys use, but let's just go back and look at it really quick. Since I've got let's see, when was that? 2012, so we'll put in 2013. So here you can see it even better because it's not a line chart. This is a weekly chart, and you see we have that similar pump and dump pattern here. And here's where you see the character change. And this is the 40-week line, this black line right here. So that's about, a little over 6 months or so here. And, it's starting to come back up. We think maybe it's going to start working. And then here's where it creates that first, what we can call a first mature base. MarketSmith calls it a consolidation, but regardless, it's a base of some sort. You have a prior run up, it's finished its bottom, and it didn't go undercut it again. And then here's that gap up I spoke of. So in this case, now that we're looking at it in more detail, you actually do see here's a base. You could wait and buy it at this prior high, or if you were watching it, you saw a character change and you were drawing your trend lines, maybe you were getting in right here. But this was a big gap up on that day. So you would have had to be.
Was it earnings?
It was earnings, I believe. Yes. It doesn't show
Okay.
it on here, but I'm pretty sure it was an earnings gap up. Yes.
Okay. And what's your risk management on this? Say, for example, give us an example. Maybe this was an example of where you buy it. Do you have like a percentage risk factor of, I'll risk 10%, 20% on a position, or is it technical for where you say, you know what, this isn't working? Something else is going on that I didn't anticipate. I need to get out of the way because, there's nothing wrong with being wrong, but I've experienced there is something wrong with staying wrong.
Yeah,
Have you
exactly.
ever noticed it? I mean, we're all
Yes.
wrong, but if you cut the cord, the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. So, how do you manage your risk on positions like this?
Well, my pedigree is How to Make Money in Stocks by William O'Neill. So I
Okay,
use
yeah,
uh,
IBD,
yes, IBD, Investors Business Daily,
yeah,
absolutely. That's really where I started my growth vesting stock,
that's
personality.
he really helped a lot of people because part of my work is diagnosing the relative strength of currency pairs against each other and relative weakness, and knowing that your preferred long should be things with good relative strength and avoid relative weakness. So um, the IBD did a lot to advance the trading community.
Yeah,
In my,
absolutely.
is
So
it still
what Bill
published?
taught, oh, sorry, go ahead.
Is it still published?
Oh, yeah,
Oh,
yes,
okay, all right,
absolutely.
okay,
Yeah,
okay. So you
so
learned
he taught.
Bill O'Neill was like a mentor to you.
Yes, he was. And when I found his system and it clicked with me, I went to see him at every seminar I could. So
All
now he's
right.
retired, so I don't get to hear him speak as often, but I still follow him. His book is still my original stock market investing Bible, I guess you could say.
Yeah, one of my contemporaries, Andre, is saying that Snap had a similar price behavior after the IPO, that it went through a high price and then a dump before it turned good.
Yeah, Snap is a really interesting one to watch, and this is like an older one, right? So
Yeah,
2017. I mean, not that old, but
right. Looks
but
like a
yeah,
head and shoulders.
this is one I've been watching. So here was that day, week one, and so what we would call this is the turbulence zone. So believe it or not, later it's actually getting close to maybe taking out that original high that it made. Now here was a gap up. Looks like it was on earnings,
Yeah,
but it wasn't sustainable. It undercut its previous, not this low it had already undercut, but this low again. And then there was some news I think that was changing it. But then here we had the bear market, and now
yeah,
it's coming back again. So yeah, this one and RS line, we're talking about relative strength. I mean,
yeah.
it's almost at new
90.
highs, at least from here, but yeah,
Yeah,
it has
pretty
potential.
powerful. Um, Let me ask you on this, how did people who bought at the IPO survive a drawdown like this, almost 70, 80%? And when were you, um, did you participate in this issue, or are you considering it now that it's almost at that price level?
Well, to be honest with you, I have a position in it right now.
Okay. You know
So
what
I
I would,
am.
go ahead, Kathy.
Well, I
I
was just going to say
interrupted.
I'm trying it here. At this is a IBD. Market Smith is calling this a cup with handle base. So I'm trying it
Yeah.
in this space.
Okay.
I like that it is coming back to all-time highs. It still doesn't really have earnings, which I wish it did, but it does have sales, and there's some news and the TikTok and the back and forth with that. So I think it's interesting. And I'm just curious if it's gonna blast through. I think it's either not going to, of course, or it is. And if it can get through here, then I think it's got a good run in it potentially.
Okay.
But we were talking about the risk management earlier, and so the Bill O'Neill 7 to 8% loss is what I follow. And
Okay.
this is a mature stock. It's very liquid. $20 million daily, 50-day average volume times the price. So we've got definitely a lot of liquidity there. So I would treat
Okay.
this a normal position size, which for me would be starting around 12.5%. And then I've got the 7 to 8% stop from my purchase point.
Okay. I'm noticing here from the IPO to the low was about 9 months. Have you done any kind of back testing or studies on how long after the IPO they go through this phase before they're, is it 3 months or is just different with every issue? Is there an average amount of time that you find yourself, you like on the opening day, you don't go and you're waiting for that due diligence phase? Is there an average time frame for how long that takes after something goes public?
So what we did study is that most will undercut that day one close within 3 weeks. More than half of them will do that. And then 91% of them, so pretty much almost all IPOs will undercut within 2 years. So we do know within a 2-year span, it could still keep going even lower. What we haven't quantified, but I've observed a lot, and I was saying it with the 6 months. Within 6 months, I think is like the earliest it can come out of it. And usually it's right around where you see that 40-week line. And I like to really start paying attention to that. So like at the beginning of this year, and I mentioned this earlier too, I was really looking at, well, what are the IPOs of 2019 that now are setting up for 2020? And when 2021, as we get closer to next year, believe it or 2021, I can't even believe it, right?
Yeah.
I'm going to be looking at the 2020 IPOs and which ones are going to be setting up.
Okay.
Yeah.
And how long have you been doing this? When did you start doing this IPO type investing? When
Well,
you started?
started this IPO study about 4 years ago, I believe. So 2016, it's just me and my other co-authors, Ipos, Eric Kroll, and Kurt Dale. Yeah, we met through an IBD meetup years ago, back in 2006, and just, stayed friends, colleagues. And then we were just like, is there a way we can figure out which are the top? I mean, there's got to be a way,
Yeah.
So we just kind of embarked on a study. We took our time at first, and then we said, we got to finish this. And then next thing you know, we thought we had enough information that we wanted to share it with others.
Okay. Well, I would say in general, that time frame has been during a prolific bull market. And I'm wondering if you've done any studies. It's been such a long time, I don't even know if they exist, and this isn't a forecast, but what do you do in case we do enter at least a bear market? I know we had that COVID crash, but if you just closed your eyes for a month, the market didn't do anything. It was back to where we were in a few months. So will there be less inventory during bear markets of IPOs? And how do you know when you're entering a bear market? Maybe IPOs could be some type of lead indicator for, I know that when there's like a lot of froth and a lot of IPOs and supply hitting the market, that's a sign of kind of euphoria. So I'm wondering if you do anything with sentiment of the general market in relation to IPOs.
Yeah, that's a great question. We didn't study it specifically, but I think you can definitely see a correlation when the market's bad. You're not seeing any IPOs coming out. In fact, my co-author Eric Kroll did an interview earlier this year where he was like, the IPO market is cold because no IPOs don't want to come out in a bad market. And now, since we've had this great rally, now we're seeing IPOs left and right. So there's absolutely a correlation. And I think what's
Okay.
also interesting, what we noticed is, one of the IPOs we studied for this book was Acacia, ACIA, which probably finally might not be has closed, since it was, I forget who it was merging with now off the top of my head, but that was one that came out when the market was like really bad. And it was like the first IPO that actually had earnings and sales. And it was like, oh, finally something. So I think if there's a bad market and we see an IPO like that, then that's something to look for sure. But definitely I think if the market's bad, you're not going to see IPOs, and if the market's good, then everyone's going to try and get out. And then that's when you really have to be picky.
What about new companies going to a listed offering rather than an IPO? Is that competition for the IPO market?
Are you talking about the SPACs?
I don't know if there's SPACs. Maybe it is SPACs, but there was
Or the
another
direct
way.
listing?
Direct listing, yes.
Yeah. So, that's really interesting. I mean, Spotify, we thought maybe would be one to watch. And it is one to watch. I mean, let's pull it up really quick. I mean, we were really watching this because we thought, okay, well, this is going to be direct listing. Maybe it's not going to have the issues some other IPOs have, but really it hasn't acted much differently. It had a little bit of a run up. This one we call the late bloomer, but then it just had this really long institutional due diligence phase. It's finally powered through its turbulence, but now it's kind of choppy again. So haven't really seen anything specific that direct listing gives you any more of an advantage at this point.
Okay. And I want to take one question. She's been persistent. Jane would like to know, are there any cannabis stocks that you participated in IPOs, and they had dramatic runs initially and have all really sold off over the last year or so? Anything in that sector that you like?
Which sector?
Cannabis.
Oh, cannabis.
Yes,
Okay,
cannabis.
sorry, I missed that
It's
part.
all right. Put your ball. You're a triathlete, so I know you're not indulgent. So anyway, any of
That's
those
funny.
any of those issues that are interesting to you after this big pullback?
Well, Tilray is a good one to look at because it had a huge run in
Wow.
here, and I did participate in this. So I was using fast rules. We talk about in the book that if you're buying from IPO base, you've got to use fast rules, in that it's not going to be it's going to be short-lived. So you want to be able to get in and get out. And of course, it does not. This is just,
Yeah, people
well,
became millionaires on moves like that.
so, but I did participate in this. And when the way I like to play this is, if I'm buying it from the IPO base, and if I'm lucky enough, the stock's lucky enough to have a run like this, usually what I've observed, by the time it breaks this red line, which is the 10-week line, it's pretty much done until it finishes its institutional due diligence phase. So I was definitely selling it somewhere in here. I didn't get this crazy day. This was the day or the week that they even had to stop the trading. I think they were interviewing the CEO, and it was just going crazy that they halted the trading on this week.
Yeah.
And then you had a few more here volatile days, and then for sure, I mean,
What
I
a
wasn't
bubble.
after it broke this line.
Pop goes the bubble up there when they halted it.
Yeah.
Kathy, for people that would have an interest, perhaps you could show your website and how they could get your book and
Yeah,
begin
absolutely.
to learn
I would
about
love
this.
to. I
Because
would love to. So we have a website. It's the Life Cycle Trade.
Okay.
And if you just scroll down, of course, buy now if you're interested in purchasing the book. It's available on Amazon, and then a little short bio about all the authors here. And then
Look at those reviews. I've interviewed Jack a few times, so if you have
I'm really
Jack's
looking
name
forward
on
to
it,
his new book.
yeah, maybe you'll be. They're not going to be unknown anymore.
That's
The
right.
unknown market wizards. I told them but you know, great endorsements, Peter Brandt. So I encourage everyone who wants to diversify from short-term spec trading to this is kind of a little bit on the spec side. You know, it's not traditional to buy things like this, but you know, it's good for people that aren't risk averse to be looking at things that, God, there's been a lot of home run balls out there during this bull market. So may as well go with learning from Kathy,
Yeah,
is my
thank you.
opinion.
Well, at the bottom of our website too, we have all the interviews that we've done. So of course, this one will be included in here as well. So if you're interested
Okay.
in learning more about us and our story, and we've listed some of the stocks that we've talked about, it's all right here. So yeah, thank you
Well,
so much.
it was really great meeting you, Kathy. And, you know, I wish you continued good fortune and your readers and subscribers. I wish you, you know, uh, the greatest success in your business and in your own account. I'm
Well, thank
rooting
you so
for you.
much. I really appreciate it. This is a pleasure and an honor.
Kathy Donnelly, everyone, and you could find her on Twitter as well. Her Twitter handle is at KGD_investor. Thanks, Kathy.
Thank you.
All right. Good hunting. You know what? You survived an interview with me. You know what that makes you?
I don't know.
My trading warrior sister.
Oh, I love it.
All
Perfect.
right. All right, Kathy. Have a good one. And thank
You
you for
too. Take
taking
care.
time today. All right. Bye
Oh,
bye.
of course. Thank you.
All right, everyone. That's a wrap. See everyone for Turnaround Tuesday. You're very welcome, everyone. I'll see you. Don't just count your pips or IPOs, count your blessings. We'll see you tomorrow.